Onto your markets now. Asian markets generally closed in positive territory. The Nikkei share average rose by 1.91%. The Hang Seng Index ended the session up 0.75%, while the Shanghai Composite Index gained 0.44%. US stocks reached record closing highs yet again on Monday. Tech stocks continued on their positive note. Market players are said to be pricing in a 74.5% likelihood of a 25 basis point cut on the 18th of December by the US Fed. This despite the fact that expectations have been variable given sticky incoming down inflation data and a robust labour market data. The Dow Jones Industrial Average declined by 0.3%. The S&P 500 rose by 0.24%, while the Nasdaq Composite Index climbed by just shy of 1%. All right, let's go to Makwe Masilela now. He's the Chief Investment Officer at Makwe Fund Managers. A very good afternoon to you, Makwe. So our local GDP contracted, which went against the market's expectations. There was an expectation of a 0.3% rise in third quarter GDP. What has been the reaction in terms of our bonds and the currency?
Unexpectedly, we saw the rand strengthening as a knee-jerk reaction to that. I mean, it's now at almost 1809, and also our bond yields, especially on the 10-year, we saw that going up by at least 6 basis points. And I think markets are looking past all that and say, let's see what's going to happen going forward. And maybe it's all because of the reasons that caused that decline. If it was not because of agriculture, we could have been having a growth of almost 0.4. And we are saying these are the things beyond our control. Drought, there's nothing much we can do about it. It's not about how the economy has been managed and the issue of load shedding, or at least they'll be helping going forward. Maybe that is why the market is trying to look past that bad number that we realized, as you said. Yeah. We expected the growth, unfortunately, it was a decline.
Interesting. So yesterday, Naspers and Prosus, they came out with their half-year results. It's something that we did touch on with the broker, but I really wanted to get your view on these particular stocks as they look unstoppable. And in the scheme of things, are they expensive? And I see Naspers now, if you want to get one share, it will cost you over 4,200 Rand.
Not necessarily expensive. Remember, the guys turned into profit this year, but they could have done that last year. And the reason they continued to show losses last year, it was because they had to write off the value of their goodwill and of the equipment as well. So yes, the guys going forward will benefit from the likes of AI. They continue to benefit from the likes of not only Tencent, but some of the investments, they continue to unbundle them by listing them. We've seen the listing in the Indian stock exchange as well. So there's still value out of their whole thing. But anyway, we don't expect the stock to go up in a straight line.
How are European markets doing right now? I see that there's a bit of bother in France with the far-right parties wanting to collapse the current government. Presumably, if that goes on for much longer, that's going to have a lot of ramifications for the euro as well as the markets there.
Definitely, and currently the euro itself, they're feeling that compared to if you compare the euro to the US dollar, but their markets that side, they're up, ignoring all that. And it's all because the markets are looking at the bigger picture, looking into what's going to be happening with the trade wars, possible trade wars, the geopolitics, stuff like that. But as we're talking now, the European markets are up, including the French market as well. But the euro is the one which is currently feeling the pain.
It seems that despite inflation not always playing ball in the United States, the expectation remains that there will be a 25 basis point cut in interest rates come December the 18th. And with everything on the horizon, do you think that the Reserve Bank will also be in a position to cut rates come January?
Most probably, but we don't have to forget that come this Friday, there is the mother of all reports that has to be released in the US, the job numbers. That can change things. But as things stand now, people still expect that basis point cut. But here we are trying to maintain the interest rate differential between the rand and the US dollar. And most likely come January, we might also have to cut with another 25 basis points. And even given today's data, which shows that our economy is not doing that great. So we have to do something before we tilt our own economy into a possible recession.
Indeed. Makwe, thank you very much for your time and insights. As always, Makwe Masilela, he's the Chief Investment Officer at Makwe Fund Managers.